Good morning, ladies and gentlemen. May we have your attention, please? Jumbo, and a very good morning to you all. The chairman, Mr. Michael Joseph, our group CEO, Mr. Mbuvi Ngunze, KQ directors, our board of directors, media personnel, our esteemed guests, and all ladies and gentlemen. My name is Gia Anthony Kuria, and I humbly welcome you aboard this event today, 25th of May 2017, as we announce our full year results for the last financial year ended March 2017.
Good morning, everybody. I'd just like to give you some sort of highlights of our operating environment. When you look at the global context, you're all aware that the global economy is projected to grow at about 3.6% this year compared to 3.4% last year. There is some modest growth in advanced economies, but an even recovery is expected in those regions. China, which is one of the ones that has been driving the global economy, is slowing down, showing some strains, and has some impact on emerging economies. From the aviation perspective, a couple of things to note. Load factors are forecast to slip as demand, as capacity is growing faster than demand. In North America, profits still solid, but slowing down. But Africa, still the slowest region, or the weakest region globally, with 5.7% loss. Equity owners in the past years for aviation have made a solid return on investment over the last 2-3 years, but it's going to drop down from the record levels we saw in the last 2 years. For those who do analysis from a credit point of view, credit metrics of airlines are not as good as in 2016, obviously as a return on capital reduces, but the balance sheets for a lot of airlines globally from a financial point of view, fairly solid. But we are in an environment where infrastructure costs are significant all across the world. And when you look at it, for example, in Europe, infrastructure costs alone add 2.8 billion euros to the cost of doing business for airlines. Coming to the benefits of airlines globally. Today, consumers are actually benefiting from lower prices. We have seen real reduction in prices of tickets globally, and there are more routes that you can fly to because of the expansion in capacity for airlines. About 1% of global GDP is spent on air transport. That's the estimation. The industry employs 62.7 million jobs globally, and governments gain substantially from this investment. It's estimated about 123 billion worth of taxes. Jobs in the industry should reach an additional 2.6 million, and productivity is improving globally. What are some of the headlines that you are seeing today? And this is just headlines over the last 2 months. Singapore Airlines reporting losses. Emirates just last week recorded a plunge in losses, 82.5% over the last year. EasyJet on the back of the Brexit and the weakening pound. Air Berlin in Germany also recording losses for 2016. So the industry is in upheaval, and on the back of a very good results in 2015, 2016, beginning to turn. What is happening from a growth point of view? If you look at it globally today, ASKs, which is the available seat kilometers, are growing faster than passenger numbers. And that's partly the reason why passengers are benefiting, because there is actually significantly more capacity in the global market than there is demand. And this is uneven. You will always ask, and out of this region, we are always asking what's happening in Africa, what's happening in the Middle East. What you see from the chart there is that the Middle East carriers are actually growing capacity much faster than everybody else, but the uptake of that capacity is not as strong. That's quite a telling sign. When you look at Africa, Africa is also growing. This year, estimated to increase capacity 4.7%, and matched by demand around 4.5%. When you look at the financial results, over the last 2-3 years, North America has dominated global profitability. For only one or two reasons. One, they went through a major restructuring over the last 10 years. They have been through major consolidation, and they're very much a homogeneous market. And they're running assets that are probably largely paid off, and they're delivering value today. More than 50% of global profitability is in North America, and it's still forecast to remain that way. When you look at the Middle East, only 0.3 billion forecasted in the Middle East. And for Africa, around 0.8 billion loss. Those are sort of global statistics, just to put all this in context. Coming closer to home in Africa, what headlines have we seen over the last 2-3 months? Ethiopian Airlines just announced a heavy cost-cutting exercise. That's quite telling. SAA losses ballooning to 4.5 billion rand. AMCON in Nigeria, which is a government investment arm, is just injecting money in ARIC because the two carriers in ARIC face, on the back of very serious depreciation in currency, basically were almost bankrupt. And Egypt Air, the minister there said that their losses increased, particularly on the back of currency fluctuations. So fairly the same story that you're seeing globally is also being played out in Africa. To KQ and where we are from a business point of view. Sometimes we forget to talk about our brands, and it's important that you understand Kenya Airways family is quite big. Beyond the fact that we run the airline, which is a passenger business that you're aware of, we have the cargo business, which is about 10% of our business. We run a holiday division that we are actually growing. The technical part, which is the repair and maintenance organization, is a growing part of our business, and we're actually servicing quite a number of players across Africa. The Pride Center, which is our training center, which is really the investment around training our own people, but also training people for the market, which is important. And Jumbojet, the newest kid on the block, 3 years old and growing every day. Just 2 days ago, we received a new aircraft for Jumbojet to improve the reliability and quality of our services in Kenya. And so proud of all the actions that have been happening. We announced a year and a half ago the launch of our turnaround program, and Michael has alluded to the fact that the turnaround is truly embedded. I just want to reaffirm that, because over the last few years, KQ has gone through a tough time. And what we did a year and a half ago, we said, how do we reconsolidate and how do we get this business back on its footing? A lot of people had buried KQ, but KQ is stronger today than it was 2 years ago. We set out 3 priorities. How do we close the gap on profitability? How do we revisit our business model and make sure it's relevant in the competitive context and work with the right partners? And thirdly, how do we make sure that the financial condition of KQ is stable in the short term and in the long term? We're delivering on these promises, and the turnaround is truly embedded. We're winning today from Operation Pride. We have already banked 342 initiatives, which are really driven at generating revenue and cost savings, as well as cash flow in the business. The initiatives range from as far out as changing our pricing structure, renegotiating with our suppliers, enhancing the connectivity in the hub, improving conditions for staff. There's a whole load of things that have been done. All these really business plan, follow-up detail, day-to-day, and this has become a way of life for KQ. Winning in Africa, absolutely critical for us. We refocused our business model by increasing the density of flights into Africa, increasing the frequencies, making sure that through the hub we could connect to Africa easier, and we are seeing the benefits of this. Year on year, for example, we've seen a 13% increase in intra-Africa traffic, which is really just a testament to the fact that that investment is beginning to pay out. And then in July last year, we announced about the beginning of our capital optimization program. Michael, as he said, he's been talking so much about it, it's become like a song. I'll be talking a bit further about our capital optimization plan, because that is what will anchor the solid operational turnaround that is truly embedded for us into the future for KQ. Allow me to share some highlights which Dick will expound on in detail for the year 16-17. The first thing that we are proud of is, despite the fact that we have reduced capacity 4% year on year, our passenger numbers are up 5.4% to 4.5 million. This is a record for Kenya Airways. Even in a difficult time, we are growing. And thanks to you, thanks to our customers, thanks to everybody who still trusts and believes in Kenya Airways. On the back of that, of course, the fact that you're growing in passenger numbers, cabin factor is up 4% to 72.3%. Incredible performance in a difficult environment. Intra-Africa traffic, as I mentioned, is up 13% year on year. And we are pushing for that to grow because we still have more capacity and we will be adding more frequencies across Africa. And we've seen, despite the fact that we have reduced the available seat kilometers and the number of aircrafts in our network, we are flying more. We flew 5.3% more hours this year than last year. That just means, in another metric, that the aircraft utilization is significant. On the 787 fleet and on the Embraer fleet, we increased our utilization 18% year on year, which just shows the fact that we are sweating our assets more and more. From a financial point of view, and I know this is what a lot of you are waiting on, and Dick will expound further, our gross profit is up 35.7%. Our operating profit for the year, we swung to 900 million operating profit, which is a 122% swing from a 4.1 billion loss same period last year. That's a 5 billion improvement. And the loss after tax has reduced significantly, sharp drop of 61%. Those are the operating and financial highlights, and I would like Dick to come and talk through the financial results in detail.
Thank you, Mbuvi, for stealing my thunder. You've already told them what I was to tell them. But I think, ladies and gentlemen, we'll try to open up our financial results so that we can see what we were talking about. Our business is anchored on some key operational statistics. And I want to start by talking about the cabin factor, which Mbuvi talked about. This is a measure of efficiency. And it's encouraging because the average cabin factor in Africa is in the 60s, mid-60s. KQ has reported 72.3% on the back of increased passenger numbers carried. But I want also to draw your attention to the ASKs, which is our production or the capacity we have deployed. Despite the reduction in our wide body capacity or number of aircraft, which I'll talk to you about later, we almost delivered the same ASKs as last year, which means we actually sweat the aircraft that we're using more. We add more operations with fewer aircrafts. And that's why you're seeing a dip of only 3.7%. But despite that, the utilization, which is really the measure of efficiency, or the RPKs you're talking about, grew over last year. Okay. The other line I want to mention, and I'll talk more about, is the yield. We've seen a decline in yield. Globally, yields have been declining for the last almost 5 years. Yields have been on decline. And they have been on decline on back of increased capacity being deployed, so competition. There is also the impact of declining commodity prices, and especially fuel. So the demand, the pressure from customers for lower fares are ready to decline. And you can see the same decline is resulted here. Last year, the global average, as reported by IATA, was 8% decline in yield. The KQ results show a decline of 7.4%. The cargo tonnage is really as a result of our phasing out of the wide bodies, the 777-300, which were big aircraft, good for cargo, but because they were phased out, we have seen a decline in our tonnage that were carried by 14.6%. And this was a conscious decision which was made by management, knowing that it will have this repercussion. Following the decline in the fuel and oil prices, the yield on cargo has also been on a decline, just a dip of 5.3%. This is what I'm explaining, the slide in yield. But the good one which I want to focus on is, despite the slide in yield, the business has compensated by increased uptick. You see how we have evolved from the lows or the mid of the 60%, 66%, up to the 72% I've talked about. Let's see the results in details. Our turnover is 8.5% low compared to last year, but at a very good 106 billion Kenya shillings. And I will want to expound this further. The fuel cost have gone down slightly compared to the previous year. Look at our direct operating costs. They are down 3.7% on last year. The big gain which I wanted to talk about is the fleet ownership cost. We're down 47.5%. This is on the back of sublease of a number of aircraft. The sublease of the aircraft, we subleased. We told you last year that we subleased 777-300 to Turkish, and also 2 Dreamliners, which were the 787, which was subleased to Oman Air. And also, we have also removed some of our freight. The Embraer 170 were removed from the freight. They were returned at the end of their leases. And we have also had some sale of aircraft, the 777-200. On the combined effect of that has led to the swinging of cost from almost 30 billion to 15, almost halving the fleet ownership cost. Okay, so this is the gross profit, which Mbuvi alluded to. Our overheads have increased by 7.4%, and the overhead growth has been largely driven by the turnaround impacts which we've had. We've had staff restructuring, which we talked to you about, and we have also invested in consultancy to drive the turnaround, something which we talked to you about. Now, Mbuvi alluded to this, and I'll talk more about it later, but it's a clear swing, 122%, from a loss of 4 billion reported in 2016 to a profit of close to 900 million shillings. The operating margin is almost 1%, up from 3.5% loss. Now, this is where our issue comes, and Michael talked about it, and Mbuvi has also talked about it, and why we are talking about the capital optimization. Because despite the operational turnaround and good results come from operation, we are hit very high by our financing costs. You can see still quite a big chunk of it. I know most of you have asked in the past about our fuel derivatives. Our hedges that were existing unwound, the last one unwound in October. And on the back of that, we had a gain of the 312 million because the prices had started coming back. So when you do the mark to market, we had a reversal which brought about a gain compared to the loss that we had reported in the previous year of 4 billion. The other losses are mainly to do with foreign exchange losses. And we talked about the depreciation or the devaluation of various currencies. The clips that Mbuvi showed about what's impacting other airlines still affecting us, not as much as it did in the last financial year, but still we are still having this impact. Currencies like in Sudan, currencies in Nigeria and other countries have really lost value, and we have had to take the hit because we are trading in those countries and we had assets or money held in those countries, and we had to take a hit on that. Okay, so the big number, you see a massive improvement, 60.9% swing from a loss that we reported to you of 26 billion to just over 10 billion shillings. Okay, and then the same number there after tax. I want to just normalize this result and explain the result further. the operating profit that we've reported of close to 900 million. If in a normalized basis, and I want us to walk this journey together, because we have had to take a one-offs. We had aircrafts which were on ground, which we are selling, and according to accounting standard, and the auditors are in the house, I don't want to say anything bad, but we have to take impairment, bring them down the value to the realizable value. So we took an additional impairment of 2.5 billion in the year. I mentioned to you about the investment in the restructuring, and this combines the payoffs for staff who exited and also the investment in the restructuring. So these are one-offs, they're investment in the turnaround. Okay, another 2.5 billion. So you're looking at expenses which have gone in the accounts of around 5 billion. Yes, I also want to take account that we also got gains on disposal of assets, which is a one-off because we're not in the business of selling assets every day. So again, if we net off that, and we want to look at our results now on a normalized basis, barring anything else, we should be talking of 4.4 billion operating profit this year, had it not been for these one-offs. It's important to note that, because Mbuvi said that the operation in Pride initiative have taken root. So we expect going forward to see growth of this, because we do not have many more assets to impair, nor are we going to incur massive expenses in restructuring going forward. But normalized condition, our profit would have been 4.4 billion, which is close to 4.2% margin. And that's a decent margin, operating margin in the airline industry. Those who are in the airline aviation industry will tell you that's decent for airline at operating levels. If you get 4, you're doing really good in the aviation industry. The margins are really slim. Okay. If we look at the same from a bottom line level, we've talked about the 10.2 billion losses. If I do the same adjustment, the actual losses we should be reporting on a normalized basis, barring the one-offs, would have been 6.7 billion. Okay. So what's the story? I'm saying that we have had our tough times, but we're looking up. All indicators are showing that we are on our way up. Operating profit, losses coming up, almost coming towards the profitability level, and that's our hope and the expectation that we are moving up. Okay. Nothing much, no much changes in terms of our assets, other than the normal depreciation, of our fixed assets. So we did not invest much in assets. If you look at our equity, the movement in equity would represent the loss for the year, which tells you why we need to do the capital optimization to have a balance sheet that would support the business, because as it is, we're in negative equity now. Okay. The business still generated positive cash flow from operation, and that's what I was saying. On a normalized basis, the business is solid because it generated positive cash flows, as you can see. The only caveat I would like to say here is that given where we operate, yes, the cash you see there is not free cash which is available here in Kenya. A bit of it is tied up in some of the economies we operate where repatriation is a challenge. Okay, thank you. Mbuvi.
Thank you, Dick, for the elucidation on the results. And if you allow me just to go back 2 slides, I think this slide is important because it reflects where we are coming from. I mean, we've been through a very difficult patch. We had excess capacity in that period. We faced the perfect storm from an environment point of view in the last couple of years. You might not remember, ladies and gentlemen, but we've been through a period where Kenya has had its lowest tourism numbers. We went through a fire at the airport. We went through Westgate. We went through all the, what are they called? Travel advisories. And the list goes, and Ebola. And this business is still surviving and standing strong, and this business is standing around. And that is why we've had to do all those adjustments and significant restructuring. But I'm proud to talk about the business also, because there are good things happening even if we've been going through a difficult time. Kenya Airways today carries over 12,000 passengers a day across its network. People relying on us to connect them. We are normally the last people to leave Bujumbura or Bangui and the first ones back in, even in troubled times, or Juba. We have 160 takeoff and landings every day. We're the biggest restaurant in Kenya, serving over 10,000 meals every day from our hub here in Nairobi, and more in the network. We serve 53 destinations, but connect through our codeshare partners to very many more destinations across the world. 160 tons of cargo, flowers, fresh fruit, vegetables, mobile phones, shoes, clothes, your personal effects, name it, every day, ladies and gentlemen. And we're doing other things too. We've just introduced Livingstone, Cape Town last year. A month ago, no, actually this month, we started to fly across the other side of Livingstone, Vic Falls in Zimbabwe, to Cape Town. So we now fly 6 times a week through that region, Livingstone or Vic Falls, into Cape Town. We're increasing frequencies in Africa, 20 new frequencies on top of the regular flights that we have. And we continue to find exotic destinations to fly. You might wonder, why does Kenya Airways fly, for example, through Entebbe to Bangui? We're actually serving the requirements of this continent by connecting people who need the UN mission that is based in Entebbe through to Bangui, where they're carrying out their peace mission. And the list goes on, ladies and gentlemen. In the last year, we've also got awards, and we want you to vote for us again this year because you believe in us. We were voted Best Airline Business Class and Best Airline, African Airline, for the 4th year in a row. The vote is on right now, and if you want the link to that vote, please ask some of my team here, because we need to be nominated again and be voted by you, the traveling public, the best airline in Africa and the best business class again, because you know that we deliver the service and we will continue to deliver that service. Going forward, ladies and gentlemen, what are we focusing on? Operation Pride still needs to be at the center of our business, focusing in delivering our strategic objectives. We've talked about the fact that the turnaround is well embedded, well and truly embedded, and we are seeing those results. Michael has talked about the fact that we are pushing hard to make sure everything is working right. That will continue to be the focus of the business, and I can commit to you, even as I leave KQ, that is a strong focus of the team that I leave behind. We are now spending a lot of time, in fact over the last 8 months, on the capital optimization program. The objectives of the capital optimization are twofold. One, how do we reduce the overall debt structure of KQ that Dick alluded to earlier? And secondly, how do we increase, or how do we improve the liquidity profile of KQ to allow us to have sufficient cash to run our business? And that's a process that we've been working on. I'm glad to say that a lot of our partners who've been working with us on this are actually in the room today. And we will be announcing in the next couple of months the results of that capital optimization, which will actually put Kenya Airways in a much stronger footing to deliver on its promises for now and for generations to come. In the context of the business, because it's important to look ahead, what is happening for KQ and how is KQ preparing within its strategic objectives. In Africa, any year you have more than 5 elections. So we are used to elections, and the exposure of KQ to Africa is significant. We know that elections are events, so we are not worried about elections, ladies and gentlemen. We have elections all across Africa. It's important to know that we know how to react to these conditions, and we know how to adjust to them, even if we are going to have elections in Kenya. You need to continue traveling and not let elections worry us. Secondly, currency depreciation and repatriation. A big challenge for us, but we are finding ways and means as an industry to actually recover from this. We had problems in Nigeria in the middle of the year to repatriate our currency, but working with IATA and the Nigerian government, we've been able to find solutions through some innovative financial arrangements to be able to now have a much more stable repatriation process. And I think that should be the process that we'll continue to see across Africa. There are a couple of niggling spots in Africa, but we hope that that doesn't persist for too long. The commodity price environment is impacting the African continent. The softening of commodity prices, the softening of Chinese economy has an impact in terms of the economies that were are heavily reliant on commodity prices. But from where I stand, I think we've been able to weather that storm, partly because firstly, we are not exposed to any single country significantly. Secondly, Africans are traveling in spite of the fact that commodity prices are actually dropping. Terrorism is a phenomenon that is with us. In this sense, I must thank the government of Kenya for the investment it has made from a security point of view, because we've seen an environment where there is a renewed confidence in travel into Kenya. But I think that's a process. I mean, you saw a terrorist attack in Manchester. Just last week, you've seen attacks in Brussels, you've seen attacks in Paris. So no country is immune to these risks. And I think all of us have a responsibility, not to over-sensationalize them, but recognize the investments a government have to make. Fuel prices have been on the up, but the industry, for lack of a better word, is pissing prices. In fact, there's a famous quote by the CEO and president of Emirates Airlines who says that we are actually madly, all of us, going down into an abyss in terms of pricing, because fuel prices are going up and all our prices from an operation, from a marketplace point of view, are actually going down. So there will have to be a point where we will see a reversal of that trend, because it's actually impacting global profitability. And for the benefit of those who are financial analysts here, you might want to know that when you look at the industry aviation results, I talked about $35 billion worth of profit in the aviation industry, compared to Apple, which generates $13 billion in one quarter. That's a sort of comparison. 35 billion in a year, 13 billion in one quarter. And you think, these guys really sweat to generate the kind of results they do. Taxation is an ever-continuing debate that we have with our governments. And it's not about taxation per se, but fairness across the regions. And that continues to be a big theme that we push through IATA. And last but not least, the quality of infrastructure that we fly into, because you also are impacted by that. You want to see good operational facilities, but those facilities have to also be at the right level of cost. And that continues to be an ongoing debate for this industry.